The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we started a new month on Friday, but it didn't necessarily bring us anything new in terms of market action. The grains and oilseeds finishing mixed to lower into the weekend. We did get a little bit of a bounce in cattle futures after a sharp sell-off on Thursday. That might have been a case of some profit taking potentially at the end of July. And we saw the stock markets under a bit of pressure on Friday, a lot of that stemming potentially from the trade and tariff announcements and so much more. Let's try and dissect things here from this past week of the trade. Joining us, Naomi Bloom, Senior Market Advisor at Total Farm Marketing. Naomi, it's good to talk with you again. How are things in Wisconsin?
Oh, things are going well. Crops look good. Hay crop is looking good. Everything all right, and some cooler temperatures here. And of course, football season right around the corner, so everything is exceptional.
I was going to say, I'm happy football is back. I kind of dozed off during the NFL Hall of Fame game Thursday night, but if anything, we got football back on the TV and soon to be back at our high school stadiums and college and so much more. So, fall right around the corner, even though we still got the whole month of August to get through for summer, and et cetera, et cetera. And I think a good spot for us to start is the weather. Continues to be the overwhelming theme. Good conditions, crop conditions continue to be favorable in many areas, and that just kind of has kept a lid, of course, on these grain markets throughout much of the month of July, and sounds like maybe even here into August, Naomi.
Yeah, that's absolutely what's been happening. So crop conditions, just fantastic. So we're seeing, corn prices struggle to rally because of that when the crop is rated 70+% better with good to excellent conditions. That's going to keep the market in check. And right now, traders are trying to understand where that crop size is going to be for corn. Of course, USDA at 181. Traders thinking it might be 184 or 185. Of course, there's some pollination issues that are starting to emerge out there. But right now, when we head into that August WASDE report, just remember there's no boots on the ground for this report. Satellite imagery, farmer surveys. And looking back at the past decade, actually 6 out of 10 years, the USDA has increased yield on this report. And the average increase of yield is right around 3 to 4 points of yield increase. So just be aware of that. And then the years where they reduce yield, it's by about 2 yield points. So with crop conditions looking great, I'm kind of thinking that we're going to see that yield increase on the August 12th report. But at the same time, some of it might be priced into the marketplace. So we'll see what the USDA does with that. And then if they make any changes to soybeans or not, of course, with soybeans, you never know what you got till harvest. So I'm not sure that the USDA will make any big changes there.
Well, and thank you for some of those average stats there as we get into that August WASDE report. And I think one has to wonder, to your comment, maybe some of this is already priced into the market. I think a lot of folks are wondering how much lower can we go here? December corn, kind of the 410 level as we closed out on the day Friday. Soybeans below $10. I mean, how much lower do these markets potentially have to go before we explore and probe a bottom, I guess, so to speak? I know a lot of producers are frustrated, I guess, at these price levels right now.
Well, it's horrible prices, and I can understand the frustration. From a technical perspective, when you look at those December corn charts, if we get down to the $4 level, that's the next support area. But if $4 fails, then the downside points to $3.75. Now, that could be a quick push lower because at that price point, I would think that we'll see a lot of export demand pick up on top of what we've already seen, because that would just be bargain prices for corn, period. And then on the soybean side of things, we'll find out for sure what we could see for prices to go lower, but the November beans breaking below $10 this week was not fantastic. It's about 25-cent increments, each support level lower. So 975 might be the next target. That would be near the old lows from a few weeks ago. Well, I guess maybe a couple months ago. But then we'll see if that support area holds or not. And part of that depends, of course, with August weather and then the August WASDE.
Corn export demand has been really good through the early part of this year. And one has to wonder if that's part of what's keeping a lid potentially on corn. Maybe the trade thinks that we have enough to get through to new crop supplies, not only from the U.S., but from Brazil as they're wrapping up safrita harvest. I wonder if that's maybe into the psyche of this corn market. And I'm not sure. What are your thoughts on that?
Well, I've been wondering the same, and my thought process goes back to years past where we have big carryout, and some years we do find a harvest low around Labor Day, but we don't necessarily rally substantially after that. It could maybe be a 15 to 20 cent rally or just a choppy sideways pattern where the low is definitely that Labor Day time frame, but we just don't get the traction going. And of course, to your point, with the safrina crop being so big, that's slowly getting out there to the world right now at the end of August here or into September when our US crop isn't quite ready. But you also have to think of it from the perspective of other countries around the world. If they know that this Brazil crop was big enough, if they know that our crop is going to be big enough, they're going to unfortunately let the American farmer store the grain because y'all do such a great job of storing it and keeping it in great condition that then they can just call upon us and we're going to go back into that just-in-time freight mentality where other countries around the world will buy from us, but they're going to let us store it and then they'll just buy it as they need it. So that's my concern. And that might make basis stay wide throughout the fall. That might keep futures prices in just a lower, yucky trading range as we get into September. And maybe even into early August. So there are some definitely points of concern and consideration to be aware of.
Well, you led right into where my brain was going next here. Is it going to be the job of the cash market in different localities to try and pry some bushels out of producers' hands and keep it out of that storage here potentially, Naomi?
I think that's exactly what we're going to see. It'll be a local basis competition, a local basis effort. Every part of the Midwest different. So what could maybe shift that around? I mean, we know that Mexico is going to be a great customer, no doubt about it. We're going to, though, wait to see where our ethanol demand comes in. Is it going to be strong? Yes. Is it going to be stronger than what USDA projects? I don't know, probably not, but it's a great number. So that demand is there. It's just a question of could there be new demand from other countries? But at the same point, if other countries are thinking that there's enough global supply available, they might be slow to agree to some of these trade deals that would maybe benefit American farmers. So I'll be curious to see what transpires over the next couple months.
Naomi Blohm with Total Farm Marketing is joining us here today for analysis as we closed out the week of trade on Friday. Kind of mixed action across the board. Let's talk a little bit more about tariffs and trade deals. And a lot of uncertainty here. We've obviously seen plenty of framework announced here in the last several days. We've seen more tariff announcements from the Trump administration on various countries. We still don't have an elusive U.S.-China deal. I wonder, though, with everything going on the trade and tariff front, if maybe our ag markets are a little desensitized to all of this news until we get more concrete answers, Naomi.
That's exactly what it is. So if we get some trade news, well, of course it's welcome if it's in our favor. But at the same time, we're not seeing that circus of price action or circus of emotion like what we saw in late January or early February as the new administration was taking over. We just don't have that craziness anymore. And the market's more like, well, we're going to assume everything is okay, moving along, plugging away. And we'll get excited only if we see one of these countries show up and buy an over-the-top amount that we weren't expecting. That's when I think the traders will get excited. And until we see something like that, we're going to assume that we're just plugging away with current USDA projections. So that's, I think, where we're at.
How important is a U.S.-China deal, a phase 2 type of deal here? Amid all these other announcements we've seen, is that still the elephant in the room for commodities, in your opinion, Naomi?
Well, it totally is, because we know that China has been buying a lot of soybean product from South America. That's not a secret, but they're not showing up to the U.S. market quite yet. So part of it, I think that they're kind of dragging their feet in a sense to see where our crop is or isn't. If we have a big crop, they might be slower to come to a trade deal agreement because they might think, well, we could get prices a little lower yet. And if we can get prices lower, then they'll show up and buy. Do I think China's going to buy American product? Yeah, absolutely. I think that they will show up. It's just the question is, are they going to show up and just meet the current USDA demand projection number, or do they surprise us and buy a little bit something extra? That's the question mark. And I think that's also why soybean prices are stuck right now. Yeah. We don't have any friendly news, either from weather or from a trade deal to get the market to rally. And that's why soybean prices have just been drifting a little bit lower.
How about in the wheat complex? Let's talk there a little bit. I think across all three, Chicago, KC, spring wheat, we're at, fairly low levels here. We can't buy any sort of rally there, it seems. I know spring wheat conditions in the PNW, for instance, are pretty poor. There's talk of poor barley conditions in Canada, things like that. You look at the wheat complex, what are you tracking there as we get into August?
Well, the perception right now, everything you said is totally true. But the perception right now is that from a global perspective, there's just enough wheat to get us by till the next harvest in whichever hemisphere. And so that's why the market is slow to drag its feet. The other thing, when you think about wheat, that's a very big political crop because you have to be able to feed your people as countries around the world. It's not just wheat, it's also rice. Rice prices have come down and there's a surplus of rice right now. So between food for wheat, food for rice, we have enough food to go around. So there's no perception that we're running out of supply or perception that the prices need to rally. So I'm wondering if we're going to see wheat prices just kind of stay in a lower price range. I don't know that they're going to go a lot lower than where we are right now. We are seeing our U.S. wheat exports fantastic because the prices are cheap enough and they're competitive enough from a global perspective. But at the same time, we just don't have a story yet to get that wheat market to have a get up and go rally.
Yeah, you threw rice in there with wheat. I wonder, can you bundle the cotton market in there too? I know for cotton producers, the margins and price action hasn't been great. And I feel like cotton is really tied to a lot of trade and tariff and export news right now as well.
Well, it is, of course, when you think about the amount of cotton that is consumed or used with India, cotton around the world is perceived as good enough and supplies are good enough. And of course, there's a concern on a global perspective of clothing from the standpoint of if the global marketplace isn't humming, do consumers have extra amount of money to be spending on clothing? So there's a question of demand that way, but right now the supply is viewed as plentiful. So we'll see if there's anything in upcoming trade and tariff agreements that would address cotton and maybe allow for some of our exports to pick up the pace and get sent around the world.
Let's talk livestock. Let's look at cattle first. I know fats and feeders had a decent futures rally on Friday after a pretty sizable move to the downside Thursday. A lot of folks equated it to end of the month profit taking and maybe some nervousness about the Brazil tariff announcement. What's your thoughts in cattle here as we closed out a pretty historic month of July and now heading into August?
Yeah, everything you said, totally true. Add to it, seasonally, live cattle and feeder cattle prices starting August 1st have a tendency, of course, past performance, not indicative of future results, but there's a pretty strong tendency for prices to work lower during the month of August. So I think you saw that on Thursday's trade with position squaring into the end of July, also exacerbated by technical selling once we went below 5-day moving average and then went down and tested the 10-day moving average. Export sales were cruddy this past week. They were not great at all. So that didn't help anything, along again with this seasonal selling that occurs. So what we're going to be watching next week, box beef values, which have been trending lower. We're going to be watching seasonals. We're going to see if the funds start to take their ball and go home with their long positions. And I think the consumer is starting to get tapped out. We're starting to hear more about that on global news. We're starting to hear some companies say that because of high beef values, their quarterly profits weren't fantastic. So now it's becoming a mainstream news media issue. And then once it hits there, then a lot of times that'll be your market high. When you compare that, like think back to when we had the high egg prices, once it started making national news, then all of a sudden the USDA did something about it. So we'll see if anything transpires maybe with that Mexico border in the coming weeks.
And that's a great point. I think a lot of us have been sitting here scratching our heads wondering when the cattle market is going to find its top. And it just seems like we keep churning our way higher. We'll get a pullback and then boom, here we go again, off to the races. And we've done this time and time again. But that thought of the consumer getting tired at these price levels and it becoming more of a mainstream media story being featured on various news programs and more, I think that's a really great thing to think about here in terms of, okay, this is getting so much attention. Maybe this is finally the straw that breaks the cow's back, so to speak.
Yeah, right. And I think that's going to be something that we see over the next couple of weeks, especially, of course, also as we're dealing with back to school, budgets are changing, all of that. And I mean, I know that for my family, we have either spaghetti or tacos every week. So we're using ground beef and I buy a quarter of beef every year. But what I'm doing to supplement it, I'm adding in ground turkey or ground chicken because they're usually cheaper than the beef. It's on sale. It keeps my protein content high, but I'm not spending as much money at the store. And so I think we're starting to see the consumer in general say enough.
I do want to ask you about the dairy markets before we close out. I know there's been some volatility over on the dairy side of things through July and now getting into August. What are you going to be watching in the dairy market?
Well, what I'm curious to see would be the next milk production report. So the one that we recently had showed a huge increase in production, like 3%. And so what I'm wanting to see is what we do with some of those older cows. Are they going to get culled and start to see a reduction then in milking cows, which then helps to reduce production, which then brings, of course, the overall milk production lower. So that's going to be something that I'm keeping an eye on. And then also we're watching our demand as far as like domestic demand for cheese, domestic demand for butter or for protein from like whey products. So that demand has been good from a domestic standpoint. We're going to keep an eye on cheese export demand. Mexico is one of our biggest cheese customers. And so with the tariff pause for 90 days, that's actually kind of sort of welcome news there. And in general, the cheese business is pretty good from where my standpoint is in Wisconsin. A lot of friends who work in that industry and things going okay. So we'll watch, like I said, milk production numbers coming forward. We're going to see if any of those older cows are going to be getting culled and keeping an eye on demand.
Final thoughts. Of course, we always remember that risk of trading futures and options can be substantial from a risk management standpoint. Anything you would mention or reiterate to producers as we get into the month of August here, Naomi?
Yeah, I say, in general, be defensive with grain markets. It would take one heck of a friendly trade deal to get this market to work higher or like a legit perception that the yield isn't there. And it's just a little too soon to be able to have that knowledge for sure yet. But keep an eye on any trade deals out there. We'll be watching economic news as well, keeping an eye on the U.S. dollar. If that can continue to trend lower, that might be helpful for exports. And then, of course, just be ready for anything. One, big summer storm could still come through in August and really hurt the crop. So there's a lot yet that could unfold. My bias is to stay defensive, but you just got to be ready for anything.
I know if folks want to reach out for a conversation, take a look at resources and more, you guys have a lot of ways to get in touch there at Total Farm Marketing, don't you?
Yeah, absolutely. Come visit our website or give us a call, 800-334-9779. We've got an awesome team that are ready to help out.
And that website, totalfarmmarketing.com. Naomi Bloom, Senior Market Advisor at Total Farm Marketing. Thanks for joining us on Market Talk. Always appreciate the conversation. We'll talk to you again soon.
Sounds good. Thanks.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.